So if you're going to be focusing on Asia, okay, I want to build an idea of realism and kind of give you expectation, if you will, of what you should be doing each day, what you should be focusing on for Asia each day. This is what you want to be basically doing. Okay, it's an exercise of logging past price action. Now, I learned everything that I teach and I use in the marketplace by doing this very thing here. So, okay, and this is what a journal entry would look like for me for Asian session. Okay, so this is what my chart would look like for this particular day. So I'm showing you what my charts look like right now as they go into my journal. But you have to be very, very disciplined and you have to do a lot of work. Okay, so my Asian session notes for Eurodollar today look like this. Okay, now without the inclusion of all the mentorship stuff, this is sufficient. Okay, you can see that there's been a clear bearish order block. Price broke down, moved back up to it, sold off here. Then we went into consolidation, which is typical for the Asian session. The market runs above a short-term high in here, back into the order block here, and it also goes to the extreme end of this last up close candle here. Now these are 15-minute time frames, so you could argue and say, well, you know, these are very, very minor time frames, therefore the candlesticks shouldn't be that important or significant, but they are significant and they are influential when you apply the time factor. Okay, so time of day is very important. We know that this time of day is typically a consolidation portion of the day. So if you're going to be trading Asia, it's very, very important. Your objective for pips are going to be drastically reduced. Okay, there's going to be times when the Asian session really tears off and just starts to run, but generally, and this is why you want to do this, you'll see that the normal characteristic for this time of day is it's very quiet. So therefore, you have to have a very low-end pip objective if you're going to be trading this or studying it. But price goes up, hits the order block, runs down, and goes below the low here where a sell-stop liquidity pool would be resting, and you see that reaching into it right here. Okay, and then look at the nice little reaction after that. Now, it's not a lot of pips, it's not a lot of movement, but it's very, very consistent. If you look at the action Monday through Friday for 3 months, looking at one particular currency pair, you will start to see these repeating characteristics that are very generic and they're not, random, okay, as I have here facetiously placed on that little rectangle. What I'm highlighting there is the actual Asian session kill zone as I define it. So the setup would be seen here. It trades up into the bearish order block and then runs for the sell stop liquidity pool. But for those individuals that are not focusing on Asia during your time of study, you may be looking for London. Okay, so when London is defined, as shown here, we will be looking at past data every single day, and you want to note the portions of price action that would be seen for the London Open kill zone. For that, this is what you would see here. Okay, you have an initial high, so we think that the market's going to expand higher. Run that old high out, so there would be buy stops resting above that. And I'm highlighting here the London Open kill zone. And what's missing here, what would make that a specific price point to be a buy? Look very closely. See an ICT bullish breaker. Okay, we had all these lows over here, very clean level. You know what that is? It's candy land for sell stops. Price trades lower, clears all the stops, then goes above this high, trades back down into during the London Open kill zone. Okay, this would be your buy right in here, aiming for the buy stops as a run on liquidity. So your opportunity would be buying here on the bullish breaker with a run to the buy stops, and that's all you would necessarily look for the London Open kill zone, and your day would be done. But for those individuals that are just studying it, looking for case studies every single day to build up a experience reference over a period of time that is ongoing, your chart would look like this. Okay, this is how I have my chart for today, and obviously it's very informative, insightful, when you have it like this, because it builds a lot of understanding about what is being reacted off of in price action. Now, again, you want to have these every single trading day. Okay, it's not important to trade now. If you're learning, you do not trade. You don't even put demo trades on. This is how you learn. You do this every single day. You log it Monday through Friday. And then on the weekends, when you have more study time, as I shown in the first video, when you have about an hour or so or a couple hours that you can devote to, then you can spend time going back over the previous week, what price did, how it reacted, and how each individual day dovetailed into the next day. Like, how did Monday trade into Tuesday? And how did Tuesday trade into Wednesday, and Wednesday into Thursday? And what relationships Thursday and Monday have, or Tuesday and Thursday? What relationships were there for that? Or Friday? Was there any kind of a retracement or a high or low formed on any specific day? And you want to make notes on that during the weekend. Go back in the old charts, like for instance this one here. I may make references on this chart on Saturday when I go back and go through all my data for the week that I've collected. This is what I'm doing it on. Now, I use a 15-minute time frame because it gives me a lot of intraday price action, and it refines my fractals into a really small element of time. Now, I don't like to do it on a 5-minute chart because it's too much of a noisy time frame, and obviously 1 minute is just ridiculous, so I'm not interested there. But I do a lot of my notations on a 15-minute time frame. Now, if there's times when the element behind the setup is more closely seen, or clearly seen rather, by way of an hourly chart, I'll include an hourly chart perspective, but still nonetheless, most of my notations will be on the 15-minute time frame. I know what elements in price and time are going to be influential. I know it because I've done this exercise for decades. You will learn the same way if you do this. If you don't do these types of things, you're actually cheating yourself. This is the way you want to study it. Okay, put 3 months into doing this, and I'm promising you it will transform your perception about price action, and it will refine you as a better trader. Now, again, you may study the London session and eventually come to the conclusion that it's not a time frame for you. Maybe you thought it was going to be a good session for you, but the next session, the New York session, ends up becoming a more appropriate time of day. Again, to the untrained eye, looks like random price action. It's not giving you any kind of insights here. What you want to do is just go back Monday through Friday, your particular pair of choice, or 2 pairs, but primarily you want to pick one you're going to be a specialist in. Go back and add all your details, okay? And what you want to do is you want to basically try to explain, with the benefit of hindsight, what took place with ICT concepts. If you do this, again, every single day, Monday through Friday, for 3 months, for one particular session time of day, in this case it's New York, if you do this, again, you will build a far more vast understanding about the characteristics about that time of day than doing anything else. Okay, what you're doing is you're teaching yourself in an element, in an environment where you're not focusing on the money. You're focusing on the process. This is the process. Applying things like I'm showing you here. Going in, taking notes on charts, and building an experience library in your mind. I can't transpose my experience into anyone. I would love to be able to do that, but I can't. So the way you get that experience and the way you submit to the process and to time, this is what you do. You draw the notations on your chart and you go through the process every single day. Whether you've taken a trade or, say we go fast forward into time. Say you've been active in the marketplace and you've been using the concepts and you're making money, but you take a losing trade. Now, obviously you want to log what you did wrong and don't beat yourself up about what you've done. You don't want to focus on the loss. You don't want to focus on the monetary pain. Okay, you want to figure out what you did wrong and what took place in the marketplace, and you learn from that. All of my best lessons come by way of losing. Okay, and I go back in at the end of the day. I look at what I've seen in the marketplace and I map it out like I show here. This is my actual chart again today for Eurodollar for the New York session. With this information here. Now, I didn't, obviously you've seen what I did, today. I was long on Eurodollar. But this is what was a result later on in the day the market went to 117.21, made a New York reversal, and then traded lower into the day. Didn't reverse entirely on the day from the high and make a lower low or trade below the open, but it did have a reversal that offered up a pretty good opportunity. You can see the intraday high here initially that set up our New York session buy. It ran the buy stops here and caused a turtle soup sell. The opportunity was between selling it here above the old high and reaching for the sell stops below here as it's seen trading below it there. Okay, so the opportunity was in between here for a New York session market reversal profile. Now, you're going to find many times that the New York session, by having this done every single day, predominantly you're going to find the New York session is a continuation of the London session. Now, there's going to be factors that you'll learn by doing this when the session will be a continuation or when it will be a reversal. But I promise you, if you do enough of this, you'll find one or two specific criteria that will allow you to anticipate when a market reversal profile should come. But it's more insight and more experience by doing this. If you don't do it, you're cheating yourself and you're robbing yourself of valuable experience that you can't beat it. I mean, you can sit down if you have a day off of work and you can go back literally over a couple weeks and do this, okay, and build in a great deal of history in your study journal. But in the beginning, you don't want to do that. You just start fresh with today or yesterday and build your study journal up, and you'll be on your way. But it can't do the New York Open or London Open or Asia. An opportunity can be seen by using the London close. Now, London close, again, is another time of day, it's similar to that of the Asian session. It's very low in terms of volatility. It does have some quirky characteristics to it, but for the most part, it usually has the capping effect of the daily range. Moving from a naked chart to more notations, this is how I internalize what took place for London close. You can see here the rectangle is highlighting the London close kill zone as I define it. Market trades up into a bearish order block, seen here. Trades up to it here, and then attacks the sell stops below here, and reaches back down into the ICT bullish breaker here. Trades down exactly to the very low to the pip. Okay, and for those students of support and resistance, if you like that, it trades back down to the old high here. But specifically, how we pick real support and resistance is based on institutional order flow and reading price action. And the best way of doing that is studying my ICT breaker pattern. Beautiful reaction off of that once it trades down to the lowest end of the breaker and pulls off that low and starts going to consolidation. Now, again, because this is a type of pattern in the day that's very low volatility, generally, the characteristic is going to require your adherence to expecting or look for very low-end pip objectives, not like that you would see in the London session or New York session. Which brings us to, if you're going to be focusing on the London session, you can anticipate a realistic 20 to 30 pips on the London session. Many times you can get more than that, but I build in this expectation as a developing trader. So that way, if you are actively demo trading it, this is what you should be aiming for. This is your first profit objective. If you hold on for the rest of the day, obviously you can do that, but in London, you're going to be looking to take profits at 20 or 30 pips. Scale your risk as low as you can, but still keep the trade open. You don't want to choke or strangle the trade, but you want to pay yourself when you can get it 20 or 30 pips in London. Okay, because you very well could read London wrong. If you're trading the New York session, realistically, 20 pips for that time of day. London close, 10 to 15 pips. Now, I know some of you are thinking, 10 pips, that's not even worth it. Well, what if you did 10 pips every single day? That's 50 pips a week. I'm looking for 50 to 75 pips a week. 50 pips is a very handsome week. I don't know where you're from, but that's a good living. And finally, Asia, another time of day where 10 to 15 pips is realistic in terms of a pip haul or objective. If you are going to be trading Asia, I have to say this. You will find many times it's not going to give you a setup that is as consistent as the New York and London. Also, in your notes, you should have typically Asia or London close gives the better setup. So in other words, if Asia is really, really quiet and it doesn't give you a setup, it means generally that London close that same day will give it to you. In contrast, if Asia gives you a very nice move, that typically means that London close will be quiet later on in the day. Okay, so what I want you to take away from this video is a way of balancing your time, targeting specific times of the day for study, but you only need to focus on one of these a day. So you're going to have to pick what time of day you're doing what, and then stick to that. And if you do this type of skill set and practice and exercise and being disciplined about budgeting your time and managing your time efficiently, you'll be well on your way to reaching that objective.